Good morning, everyone, and thanks a lot for joining this webinar on the Corporate Greenhouse Gas Protocol. My name is Kenneth from Carbon+Alt+Delete. I'm joined today by Felix, my colleague. We will both facilitate the presentation. He will do the most interesting part, but allow me to do a quick intro, maybe as a starter, some house rules. One, the webinar is being recorded and will be shared with every one of you. Second, by default, you're muted and your camera is off. Normally, I think you're not allowed or not able to switch them on. If you have questions or remarks, feel free to put them in the chat. And we do have a Q&A session at the end, but you don't need to wait until then to share your questions. And we try to address them at the point if they're relevant, if not at the end of the call. Great.
And we also have some other people from Carbon+Delete in the chat. So if you see other people than us responding, they probably are from our team.
Exactly. We have kind of a big audience, so we asked for some backup, right? So maybe 2 words about Felix and myself. Maybe I can start, and then Felix, you can say a couple of words about yourself. So my name is Kenneth. For those who haven't seen me yet, I'm one of the co-founders of Carbon+Delete and overseeing our go-to-market. Personally, I have an engineering background in energy and sustainability engineering, based in Belgium, close to Brussels. And as said, today I will mainly do the intro and the outro. The interesting part will be done by Felix. So Felix, feel free to introduce yourself in a couple of words.
So I am Felix. I have the wonderful title of Carbon Expert at Carbon+Delete. A good thing about a startup company is that you can make titles as you go. I think it's a good title, though. I am the focusing on everything emissions related, protocol related, and everything technical regarding our carbon footprinting calculations. I am Belgian as well, although I actually live in New Zealand. Today I am happily in Belgium for a visit, though. And yeah, I'm also an engineer by background. And I did a lot of sustainability work in the past for various companies and organizations. And now I have been part of Carbon+Delete for 2 years.
Yes, exactly. Thanks a lot, Felix. What is the agenda for today? Basically 3 aspects. One is a quick intro about Carbon+Delete, just that you know what we do, also what we don't do. And then the bottom or the main body of the webinar is about the Corporate Greenhouse Gas Protocol. We work with the Corporate Greenhouse Gas Protocol very much in detail. We work with a lot of sustainability consultants applying the Greenhouse Gas Protocol. And we have learned several things about the Greenhouse Gas Protocol, several struggles that we have that some of you might have. So we would like to pinpoint on some aspects that we have learned and share our learnings with you. As said, we provide 20 minutes at the end for Q&A. So if you have questions, put them in the chat. We'll address them at the final part or earlier if we manage to have a look at the chat and at the slides at the same time. About Carbon+Delete, I guess majority of you already know, but for those who don't know, allow me to give a quick intro. So we are a carbon accounting software provider. And we work with sustainability consultants who use our software for their clients. And we very much believe that this is the way that sustainability reporting and carbon reporting, more in particular, will happen in an efficient, scalable way, where you have, on the one hand, companies that need to know their carbon footprint in a professional, correct way, not for 1 year, but year after year. Those companies, they don't need directly software. First and foremost, they need an expert, a person that can educate them, that can do part of the work, that can also give them the comfort that what they publish in terms of carbon footprinting is correct. And then it's a sustainability consultant that needs software to make sure that things run smoothly, efficiently, and standardized. And by the way, we didn't invent this type of, let's say, business model. This is exactly how financial reporting works. Financial reporting, which is very similar to sustainability reporting, but just, let's say, 2 or 3 decades more mature. So also in financial reporting, you have end companies needing to know their financial numbers. They work with service provider, financial accountants, and those accountants use software. So there are a lot of advantages on those business model. More than happy to elaborate on that, but that's not the goal of today. Important to know is that our software is focused on sustainability consultants, and those consultants use our software for their clients. Today, carbon footprinting is still mainly a spreadsheet world. We see that consultants using our software basically switch to our platform or another dedicated carbon accounting platform for 3 reasons. One and foremost is compliancy and auditability. We're living in a changing world. Emission factors are being updated. The greenhouse gas protocol is coming with new standards or guidances. CSRD is happening in Europe. So we're living in a changing world. At the same time, it's more and more important that you don't make mistakes in your carbon footprint, because as a company, but also as a consultancy, you will be liable for mistakes you make. So there's just a need for tooling that is compliant at all times and that offers transparency and auditability. So that's really the key #1 reasons to move away from spreadsheets to platform like ours. And then of course, compliance with the greenhouse gas protocol is really instrumental. So that's basically the remaining part of this webinar. #2 and #3, you probably have read it yourself, as I've been talking too long on this slide. So I will not zoom too much on those 2 aspects, as today we will be mainly talking about compliancy and compliance with the greenhouse gas protocol. In terms of functionality, we support the full carbon accounting process, from data collection to auditing and all the steps in between. You see already twice the logo of the greenhouse gas protocol, which is kind of our Bible, but more on that later. Maybe one important thing also to say on the auditing piece, we are of course not an auditor ourselves, but we facilitate auditing of carbon footprints by third parties. Our carbon accounting engine itself is also verified by Van Sot. That's in line with the greenhouse gas protocol and the ISO 14064-1, so the ISO standard for corporate carbon footprinting. That doesn't mean that every carbon footprint calculation with our tool is by default correct and verified, but it means that if a carbon footprint of a company needs to be verified, the calculation itself, the mapping with the emission factors, the mapping with the greenhouse gas protocol activities and the like, doesn't need to be validated anymore. It's covered by our tool. So only the data accuracy and completeness needs to be validated. Final slide on the intro, just to give you a bit of an idea on who is currently using our software. So these are some of the sustainability consultants using Carbon+Alt+Delete to manage the carbon footprint of their clients. Their clients are rather diverse in terms of industries. So basically all type of industries, services, manufacturing. In terms of size, I would say it's more in the medium-sized type of companies. So let's say it starts with the SME companies of 50, 100 FTE, 10 million turnover, up to companies with 1, 2, 3 billion turnover, several thousands of FTE. So these are the type of companies that are large enough to have a professional, correct carbon footprint, but that don't have the scale to do it fully in-house. So they need to rely on an external consultant to support them with them in the beginning, but also in the years after. So that as a quick intro, and then I'm more than happy to give the floor to Felix. Felix, you can just tell me when I need to switch to the next slide. You're still muted, Felix.
Am I not taking over the slides? Because I have a black screen on your presentation. I seem to be the only one, so
Yes,
but I have no idea what slide you're showing.
Feel free to take over the slides.
Yes. I'm glad I'm actually the only one. So screen and then slides. Does this work? Are people seeing this
Yes.
section?
We
Yes.
see
And
the
that's where
slides.
you were ending as well? I hope
Yes,
so.
exactly.
Yes.
Exactly.
Okay.
You see, we don't give webinars every day, right? So we also need to play a bit with the webinars, the Teams webinar setup. But it's all fine, Felix. Go ahead.
And I do feel that Teams sometimes, once the attendees go over 100, it does sometimes struggle to keep up. Yeah, first of all, short introduction of expectations around my part. So we are going to be diving quite deeply, I guess, into the greenhouse gas protocol. Don't expect an explanation what scope 1, 2, and 3 exactly means. We're going to go a little bit further than that. We're just going to pick out a few items from a list, and we will mainly try to focus on what the practical applications of that is, or why you should bother or care about that when you're actually making the carbon footprint for organizations or companies. We're also going to show how we implement it in the software at the same time. That's not because we always want to show the software. It's also a lot about it kind of expresses the way there's someone else with that I think is not talking on purpose. Kind of expresses the way how we think about the problem and how we implement things for a reason. That's why we like to show that to you, I guess. But let us dive in to it. Open invitation still to use the chat to ask questions, but there will also be a moment in a second to have some interactivity to basically answer your questions in an online format, so we can get some feedback from you. So first, this slide, I think this is just sets a bit the stage. We're going to focus on the greenhouse gas protocol. There are still even other methodologies and protocols around to do carbon footprinting, but you can safely say that the greenhouse gas protocol is very dominant, is setting the standard for the whole industry. Even other frameworks are usually like built on top of the greenhouse gas protocol, which makes it a very good basis, and it's a very good basis for us as well to develop software on, because even if you're following a different methodology than the exact greenhouse gas protocol, because it shares the same basis, in the end it shares the same like main principles and the same way you will interact with it. You might just take a few different choices. So we are focused on following the greenhouse gas protocol and adding as much flexibility as possible to it. So in that way, to kind of accompany a lot of ways of working with it. We're showing the timeline because I think it's relevant to have a notion of the timeline. Not that you need to study the dates, but to have a bit of an idea of how this developed and also how old it actually already is. The first corporate standard on carbon footprinting was built in 2004. I was quite surprised when I learned that the first time. So this is a framework that's almost being 20 years in development, and that's, I think, one of its strengths. That's also why it is able to have that position in worldwide carbon accounting, to be like the standard that everything else is built on top of. And it's also interesting to know the timeline because of like the evolution of it. So the corporate standards, if you ever opened that document, you can tell that it's a little bit older. But you can also tell from like the tonality of the documents that there's a bit of a change. In the first document, they will still talk about scope 3 as something that is optional and that not many companies will do, and that has a lot of flexibility, and they start to nail that down way more and more as the years advance, and the tone about the optionality, I would say, of the scope 3 is changing. It's not that they're contradicting each other, but you can definitely tell that there's a trend towards more guiding and more strict accounting principles and rules. And I only see that trend continuing, to be honest. That's also where we believe the industry goes, is very strict protocols, strict rules, like Ken mentioned in the introduction. It's the same pathway as financial accounting has taken, but then in a much shorter time span, obviously. So, standards that are relevant for what we're focusing on. We're focusing on corporate carbon footprinting, so companies, and company footprints in general, not necessarily life cycle analysis or products or projects. So the ones that are of importance then is the corporate standard in 2004. Then we have the first Scope 3 standard, which definitely sets the framework or the stage for a lot of questions regarding Scope 3. And not that much later, there's a Scope 3 guidance, which actually is very concrete and has a lot of very specific application rules on how to do the Scope 3 calculations. And Scope 2 guidance is actually quite late. That is in 2015. That is kind of reframing a few things that were earlier published regarding Scope 2. So this is the guiding document right now for Scope 2 emissions. And you can also see everything else regarding agriculture emissions and land use emissions is marked here. Other stuff that we haven't focused on are things regarding projects, a bit more US-centric, and mitigation and that kind of stuff that won't be covered today, to be honest. I think this is an interactive slide. Maybe you can explain.
Yes.
So they definitely have to go to the Meti link and use the code. I don't know much more.
Exactly. Before we really dive into the content, we have prepped two quick questions. That's all, just also for us to understand a bit your familiarity with the greenhouse gas protocol. So I see some people already figured it out. You can go to menti.com, use this code, and then basically pick one of the options there. So I see already some answers coming in. So we'll give you a couple of more seconds to answer. And let me, in the meantime, take over the screen so that you can follow in real time the answers that are coming in. So I can even set a counter. So I'll give you basically 10 more seconds to answer. Seems like it doesn't want to start. There it is. Let me also switch it to percentages. Interesting. So apparently there are 9 people who really sleep with the greenhouse gas protocol next to them. That's very impressive. I hope you're one of them, Felix.
Obviously, I'm not.
Very good. Good to see. I think this is kind of in line with what we expected. The fact that you joined this call means that you have some interest or some affiliation with the greenhouse gas protocol, but it's quite of a big bunch of material and papers to go through in detail. So not a surprise that a majority of us have read it to a certain extent, but not all and not very much in detail. Moving to the second slide that wants to move. The second question is basically, what do you struggle with when applying the greenhouse gas protocol in your carbon footprint calculation? So let me give you a minute for that. You can also look at the questions or answers from the other people and give them votes. And my apologies for the 3 test questions that are answered that are still in here. So feel free to share very quickly what you struggle with. And we're mainly looking for points that you understand, of course, in theory, but that you struggle with in practice because you lack the data, you lack the tools, you struggle with explaining to your clients, what it means. And yes, Maria will jump into the greenhouse gas protocol content in a minute. No worries. Very good. There is a point on lack of emission factors, so that's definitely something that we'll get back to. Emission factors, operational control, scope 3 of scope 3, conversion factors, boundaries, categorization, and indeed land use. All right, there are more. We'll share the insights, but I see a lot of things have to do with emission factors. So thanks a lot for providing the answers. Felix, I'm more than happy to give the screen back to you so that you can continue.
Yeah, I'm taking notes to definitely spend enough time talking about emission factors. Where we're at here. So just one more response to the question. So on this question of the familiarity, I think this is good. This is really in line with what we were expecting today. So you can expect 75% of the content to be really fitted for you if you have some good knowledge of the greenhouse gas protocol, and there will be like 25% that I think is more for the deep understanding people. Well, you know when which of those will apply to you, I guess. And of course, there's Q&A. I hope for at least some questions in the end. So once again, we're going to zoom in just in a few issues. The issues we've chosen are the ones that we think we have something interesting to say about, and also often things that come up when we have discussions or things we questions that often come up when we have conversations with our clients, with the experts that use our software. And we're going to zoom in on some of the scope 2 guidance first of all. First thing, so there's 3 separate issues that I want to explain or want to point out with the slides on screen. So first of all is about the location and market-based reporting. So it is expected if you use a market-based approach to calculate your emissions, which is then like green or gray contract electricity emissions, something like that, that you also report on the location-based. That's non-optionality. It's a shall that is used in the report. So you have to do that, which makes a lot of sense to me. I think they definitely tell 2 different stories. The one tells stories about what contracts you were able to purchase, and your location base is more of a direct reflection of emissions that you cause by your electricity consumption. They can both be optimized in different ways. They both have different solutions, but you couldn't tell the full story with only one of them. So always the dual reporting is what we also implement. We actually have dual reporting in any case. It is optional if you have your location based as your primary setting, but we always dual report for clarity reasons. And then the second part we definitely wanted to just pay attention to is everything regarding the upstream and downstream emissions of electricity. So you are expected to report on the additional emissions that are related to fuel use, that was that fuel production, that for the fuel that was used in your electricity production. So that is well to tank emissions basically of the fuel that went to the power plant. And then you also are expected to report on the transmission and distribution of your of the electricity towards you. I'm talking here about the end consumer inventory. So the end consumer expecting here that or assuming here that the company you're reporting for has no has no electricity production of themselves that they sell to someone else. I want to point out here, and that is often a source for confusion, that the fuel emissions or the additional emissions regarding fuel production is only actually focused on fossil fuels and fuels that you burn in combustion. This is not a part of the amortization of things that produce your electricity. So the amortization of a solar panel, if that solar panel was owned by the production company, is not something that you should or you have to report in these Scope 3 emissions. We'll talk about that a little later when we actually zoom into the assets and the purchased goods part. So anyway, these are two things that are very very important, I guess, to always take into account when you have electricity emissions to report. And I'm going to switch quickly to our software to show a bit on how we approach that ourselves. So let me just switch back to the demo account. So for the people that are seeing our software for the first time, I'm not going to give you the demo, but I hope you can follow. So we have an inventory right here, which is basically the library of all the emissions that you have already entered in your system. Let's zoom in into this line. So it's the procurement of some electricity in Spain. It was gray electricity. And the thing that we do in electricity emissions is that we have this dual reporting that we just talked about, basically built in. So you have on top your location, your contract-based emissions. This is here, so this is gray electricity, and on the bottom you have your location-based emissions. You'll see that the emission factor that we have for the for the market-based emissions for this gray electricity is higher than the one we have for location-based. I'll zoom into that again in a second when we go back to the slide. But first of all, I want to just show this dual reporting thing. So it's also very clear when we, of course, reporting on green emissions. So green emissions are only green because of the contract type. So they're only green in market based. They're not green in location based. And that's why you see this difference between the two of them. This is, of course, it's not an option to the fact that you have to do a report, but it is an option, basically, which one of those two that you prefer to report first. And it is possible to actually switch that in the software. We have use market-based electricity emissions in reporting. You can switch that off, and then you go the other way around. That means that we'll have location-based first. And going back to the very same line, the green one, you see now that the green one has switched. Now the first emissions are the location-based, so it's non-zero, and the zero is on the bottom there. So that's a way that we handle this complexity of this dual emissions at the same time. Basically, we want to show the information but not confuse the inventory by showing two lines or something like that. Another thing is you can also see that in the report. You know what? I'm going to save time by just switching to the report I downloaded just a second ago. So the report that you can generate will do the same thing. It will show in electricity your market and your location-based emissions reported right below each other, but not added up, of course. So they won't be confused with each other. So that is the way that you can see that back. So we have different reporting tables. This is the standardized greenhouse gas reporting table, but you see the market and location based always coming back. If you switch your preferences, these things will change again. I think
Felix, there are some questions on the source of the emission factor. So I don't know if you can explain that we use AIB and why we use AIB, and that we're also adding IEA. It would be great. And in the meantime, Barbara, I see you raised your hand, but could you put your question in the chat please? That would be easier for us. Thank you.
That is excellent. That was the next part in this explanation is indeed emission factors used to do those calculations. So following the accounting principles laid out in the Scope 2 standard, the ideal is a supplier-specific emission factor. So one that you got from the electricity provider themselves, that is tailored to your exact consumption. But we also know that it is not that common to receive that or receive that with a lot of ease. So it is quite common to look at more standardized tables, and that's also what we have built into the software, which are location specific. And I just want to point this, and so let me say we have currently two data sets that we offer for electricity emissions. We have so the AEB, that's the Association of Issuing Bodies. I'll explain that a little bit more in a second. And we have the IEA, which is the International Energy Agency, which probably most of you are familiar with. But there's an interesting thing to take into account here. I feel like it's a bit of a deep dive, but it's important as an accountant to be aware of, which is when we're thinking about electricity emissions, and we're going to roughly talk about three categories. So we have average emissions, like country average emissions. We're going to have green emissions, and we're going to have gray emissions. If you have a certain emission factor explaining what the average emissions in a country is, but at the same time you're also doing market allocations, which means that you are reporting things as green, so lower, below the average, or almost zero, or often zero, in a market-based setting, then you actually need to increase the emissions that are part of the gray emission factors, because you have to balance them out. You can only allocate your emissions once, and there's not that many like emission factor databases that actually take that into account. So the Association of Issuing Bodies is the one that we have as a default currently, and that is the one that is using a residual mix that is mentioned here as well. So the residual mix, they calculate what the actual difference is, and they allocate gray emissions to people that are using gray emissions in order to be able to allocate green emissions to the people that buy green contracts, which increases the dirtiness of gray electricity. So that is our preferred data set for that reasons. But for other reasons, for example, that one is only reporting in Europe, we also provide the AIE, the International Emission Agency, but that one only has location-based emission factors. So if you will be using that database, you won't see difference between your market and your location-based. That is a consequence of the database that you have chosen. So let me go back to the software to show that once more. So if you go to the electricity emissions, let's do that for Spain. I don't know what's happening. Yes. So I feel like my screen is a bit freezing over.
You might need to refresh, Felix. In the meantime, questions are still coming in. I see some people already start helping us and answering some of the questions. That is good. I think one point that's often come back on emission factors and consistency across scopes. So one, market-based, location-based. It's important for us that you use there the same source of emission factors, so ensure consistency between how location-based and market-based emission factors are determined. There are some methodologies behind it, what to do with import-export of electricity and the like. So please always go back to the same source of emission factors, that at least you're sure that you use a consistent methodology. And the same goes between Scope 2 and Scope 3. So in the Scope 3, the energy supply piece, the well-to-tank piece, there, according to the Greenhouse Gas Protocol, you have the freedom to take either the market-based or location-based approach for your well-to-tank part of electricity. But again, we always fall back on the same source of emission factors to ensure consistency between the emission factors that you use across scopes, across activities.
Yes.
Go ahead.
Yeah. So regarding the sources used in the details pane here, we can see some additional information about how things are reported and how emissions are constructed. And here in the bottom, we see a reference to the actual source document, and this is the Association of Issuing Bodies. And like I said before, this is an attribute mix, and this is reallocating emissions depending on the contract type. I am certainly aware that I definitely need to speed up in order to cover everything. So
it seems that the Q&A and the content flows a bit one through the other.
Yes.
So, but let's try to have at least 10 more minutes at the end, really, for Q&A. So
yes, exactly. So I'm quickly even going to check if I want to skip something. So on scope 3 and the scope 3 standard, we wanted to talk definitely about just the full list of categories and emissions and activities that you need to report. I think it is quite clear to people that scope 3 it's kind of standard now that you report on all activities. Your mileage might vary depending on your location, but in Western Europe, where we are based, this is very much the standard now that you do a full reporting on all activities that are relevant for your company. So that's also how we implement it. We have a full support for all of these. And we have different emission factor data sets to cover these. And I just want to quickly touch upon a philosophy that we have there, that we have built in emission factors, like in the dropdown, like you've already seen that in the inventory. Like that's basically for emission factors that you encounter a lot, like electricity, the use of fuels like diesel or something like that. You would find those quite easily in a sort of smaller subset that you can choose, but that is prepared for you. But then at the same time, we have what we call like a library of emission factors. So it's basically like a different place you can go back to where you can explore very big databases that sometimes have 30,000 emission factors. If you were looking for a very specific thing. So typically I would say like towards the end here and downstream emission, for example, not only downstream, sorry, like purchased good of service, for example, that's a place where you would have need for very specific emission factors, like a specific type of plastic or packaging or something like that. We wouldn't be able to show that in a dropdown, and then you kind of go to our library of emission factors where we have interconnection with LCA databases like EcoInvent or other databases that we that you can find emission factors that suit your activity way easier. So that is one thing I wanted to touch upon, and then summarizing this quickly is. It's clear that the way of reporting that is preferred by the Greenhouse Gas Protocol is everything specific to the activity. So like very activity based, data based, and not necessarily like spend based. That's kind of a last resort option. So we do have spend based emission factors, but we really focus on the kind of data import that is directly related to tons, to units, to kilowatt hours, like real activity data, and reporting in that way. We think that that is the way that you get the most accurate results and also the most insightful insights. That is basically how we have, that's why we're focusing on that. Let me, I'm gonna skip few things here because we've already talked about a few. So just on capital goods, there's sometimes a bit confusion about the relationship between capital goods and purchased goods and services, and rightfully so. They are a bit overlapping sometimes. but basically capital goods are the ones that you have purchased at some time in the past, and they serve your company for a longer time, and your goods and services are more day-to-day purchases. You are not really supposed to amortize emissions in the greenhouse gas protocol. Some other frameworks do. That's why we support it in the software, but it's actually not really recommended. And regarding the energy and fuel, I'm just going to show that while I do the demo. Actually, that will be quicker. Am I skipping something, Kenneth? Because I'm trying to rush now.
Right, it's okay. And then take your time. I think this is an important piece.
It is an important piece. So for the activities, I prefer to switch to an empty account, which then actually has everything set up in the default. We allow users to change the names of activity categories for their own usage, the way they like to present things to end customers. But this is we're now going to look at the default setting, which to me at least explains the way we support the greenhouse gas protocol. So you'll recognize all these names. So we have all categories supported, but some of them are hidden by default. So like steam, heat, and cooling is quite an obscure one. So we hide that by default if you're not using it. And then you will see all the other activities coming up in the split between upstream and downstream, just as we saw in the screenshot. We have additional information always here, explaining where things are reported. We have a native support for greenhouse gas protocol and the ISO. They sometimes report under different categories, but that is basically all supported in the backend, so you don't have to think about that too often. Another thing we also allow for users is to duplicate a category and to give like different names, if you want to say, like based on if you have a good reason to do a report. But the most important part is that in the end, in your official reporting, these things will always end up with the official categories. So that's what we were looking at, and I do want, as an example, so I skipped it in the explanation and the example. I do want to show how we handle well-to-tank emissions, which is basically the emissions that come from the generation of your fuels if you're reporting in scope 1. So we're adding a line here by combustion, and I think we could let's use actually diesel. That will be interesting a bit later. So 10,000 liters of diesel. With 10,000 liters of diesel, there comes 25 tons of CO2, and you will see the breakdown by greenhouse gas. But there's actually more to that. There's more in your value chain than only the emissions, the combustion emissions that you just reported in your first scope. And the value chain emissions are actually what we will display here. So generation emissions are the ones, the well-to-tank emissions. So the emission that was part of your of the generation of the fuel before it went into the cars here. And the biogenic emissions will come back to that in the last section, is everything regarding biofuels. In a general average mix of diesel in this continent, there's always some biofuel mixed in, and that is what taken into account here. The data set that we are based on here is the UK government data set. So I want to show what happens to these. So the generation emissions, they come back in your energy supply, and that's actually what we have implemented in an automatic way. So if you look at your energy supply, you will see entries in there that are related to the diesel that you've just added. So second line was the name of the previous entry, and you see that you have an energy supply entry here that cannot be edited directly, and you get some information about the relationship of this this item to your previous item. If you change your previous item, then this one will update. That's how it's implemented. Basically, it's one of these like things that are hard to do in carbon accounting and just annoying. and we try to take care of them for you, so you don't have to be bothered by all these smaller difficulties. Did I skip something else? Yeah, so all the activities, I think we don't have time to walk through all of them. Capital goods. I think there's only 10 more minutes. Do I go back to the last section of the slides, Kenneth, or do you want to fully skip it for Q&A?
No, I think it's important to quickly mention also the flag update,
yes.
right? Yeah, well, go ahead, Felix. Maybe
yes.
put your slide back on full screen.
Yes, so the final part is flag guidance. So that is actually ongoing as we speak. We're expecting an updated guidance on agriculture and land use and forestry changes. That's where the flag comes from. Yeah, that will be a solidified framework regarding biogenic emissions and the absorption of carbon emissions in sinks that your company might have access to or be the owner of, as well as the use of sequestered carbon and anything in between. What we have fully supported already, that is everything regarding the biogenic emissions. So you've seen me show that biogenic emissions are incorporated. I'll do it once more. If I go back to the mobile combustion, so you can tell if we have this line, we'll duplicate it. We'll have it twice, and instead of diesel, I will use biodiesel. So you can see that both of these have very different total emissions, which is, of course, all to do with the accounting principles regarding biogenic CO2, because the tailpipe emissions of those two entries are exactly the same. So what happened, this biodiesel is just hiding a lot of emissions in the biogenic part. They are reported out of scope, but they still should be reported. So what happens, we also keep track of them, similar to the energy supply emissions, and we will for you append your reporting with biogenic reporting. So you have additional inventory of your biogenic emissions. They summarize yes, all the CO2 that was from biogenic origin that you didn't have to report in scope 1, basically. Yeah. 11 minutes too late, but maybe time for questions. Are you able to select?
Yes. So, but I think actually a lot of the questions have already been answered in the chat. Also, some other people basically helped answering questions, or there was some exchange of information IDs. I think just to repeat, a lot of questions were related to emission factors, right? And I think that's something that we all struggle with. Just to also restate our vision on that, right? So we as Carbon+Delete, we are not an emission factor publisher or source ourselves. We just make existing sets of emission factors available to our users, and we try to be as transparent as possible on where those emissions factors come from and what the underlying methodology is. Some frustrating, and I think Felix, the two of us, we have had discussion around that, is how to ensure consistency across emission factors that you use, knowing that one source can be very good on, for instance, market-based versus location-based emission factors like AIB in Europe, but that then they are less strong on the well-to-tank piece or the energy supply piece, right? So there we very much believe in using a consistent set of emissions factors that you can rely on their methodology across the different scopes. One other question that was asked in the beginning and was maybe not fully addressed is indeed, it's more about how we work. So our software tool is actually only being used by sustainability consultants. And we can maybe just stay on the slide. Felix, or you want to? Okay.
Slides?
Go ahead.
Sorry,
go
I
ahead.
wanted to show something. No, go ahead. Explain what you want to say.
No, but if you go back to the software, indeed, something that we haven't mentioned is, so for Scope 3 emission factors, we're also reseller of EcoInvent. I guess most of you are familiar. You're in the demo account, Felix, so you don't have access here. But we are reseller of EcoInvent. We see EcoInvent, we call it cherry picking, as a set of emission factors where if you lack certain emission factors, you can go and cherry pick the best ones that are there for you.
Yes, that's the approach I was mentioning, that like we have this access to different lifecycle databases. Some of them are licensed, so it depends on the account that you have, but that's a way to find a bigger set of emission factors if the ones that were presented to you in like the drop-down interaction were too limited. And we also have the option, we didn't point that out, and it always comes back as a question. If you have your own emission factors for some things, you basically like you calculated something, or you have something from a source that we haven't integrated, we have an option to customize one. And so like this is an example of a custom emission factor for electricity. And if you happen to know that the electricity here is a little bit different, then you can just like add that in this way. So that gives that additional flexibility for those 2% of cases where you actually want to use something that you have the own knowledge of.
Very good. Maybe I can quickly answer the questions from Jonas. Felix, if you could have a look at the questions on biogenic, and maybe let's wrap up in 2 minutes. So maybe you can just stop sharing your screen. There we are, and then let me share my screen. So I think, Jonas, you have 2 more general questions on the aim of the platform. One, we support or will support top-down product carbon footprinting, but never bottom-up life cycle assessment. So as discussed, we focus a lot on corporate carbon footprinting. There is definitely a use case of once you've done the corporate carbon footprint to top-down allocated corporate carbon footprint across a set of products or services. But really a bottom-up LCA that goes beyond the carbon or the greenhouse gas emissions that runs, for instance, simulations for different product designs and the like. That's a different type of use case, different type of tool, which we will not facilitate. On the other question that you had, we only work with sustainability consultants. Why? It's not because we don't think that there are very carbon footprint savvy people in end companies, but we are rather confident that at one point in time, end companies need a sustainability consultant for some advisory questions, to support them with a more repetitive, boring, quote unquote, reporting piece, or also just to give them a bit peace of mind, right? Just to make sure that there are no mistakes. So that's why we're only working with sustainability consultants. And it's also a commitment to our consultants working with us that we will never work directly with their clients. I don't know, Felix, whether it makes sense to say a couple of words on the other biogenic emissions, or do we get back to them on email?
It's quite like a nuanced question to be tackling in full, but I do want to say there's a question about some application of the SBTi and their interpretation of biogenic emissions. I must say what I Ezra is your name, I think. What you are describing, I thought that the way you could still report according to the greenhouse gas principles regarding biogenic for SBTi, but any in any case, we definitely have a strong affection with SBTI, and we support it. So in case there is some conflict, we will provide options to release them. I am just actually not aware of the conflict that you're describing in that manner. And then, yeah, that's too much for.
Yeah,
There's also a question.
What
Yeah.
we will do, Felix, let's also, in the interest of time, to be respectful of people's time, we can definitely stay in the call for 2 more minutes, and you can answer the remaining questions. If we miss some, we will get back to you over email. But just one more general conclusion before people start to leave. We will share the recordings, we will share the presentation. If you have any other question, feel free to reach out to us. The contact details of both me and Felix are also linked to the presentation. And on our website, you can find more information. So thanks a lot for joining today, for your interest, your questions, and the interactions on the chat. Is it okay, Felix, that we just get back to the people over email with the open questions?
Yes, I definitely want to thank people that were so kind to answer other people's questions in the chat. We should set up a coffee break that we all talk to each other clearly.
Thanks a lot for your time, for your interest, and enjoy the rest of your day, and we stay in touch. Bye bye.